After a high quality growth in successive years, Lupin now in the limelight. In the league of top 8 pharma giants, market capitalization over rupees 1 lakh crore, chronic therapy expertise in cardiology, anti-diabetic and respiratory segments, promoter holding of 47% matched by an equal holding by institutions in aggregate. It reflects on company's strong reputation and the market trust. A dominating share of North America in the growing revenue of over rupees 70,000 crores. India and other geographies equally share the balance. A well diversified geography of revenue with a strong market position. Three impressive quarters of FY26, a great revenue push from North America, exceptional year on year growth, particularly from quarter 2 and further bettered in quarter 3, an unprecedented rise in revenue and a supportive product mix, also a great facilitator. The capability of Lupin to deliver exceptional results is also evident in its core competencies. A strong pipeline of first to file opportunities carrying superior margins, the filing of over 400 cumulative ANDA along with about 300 approvals offers a strong medium-term revenue visibility. The partnership with the China-based company to market and distribute the drug across India and beyond, enabling Lupin make a major headway into obesity and diabetes segment. Over a period of 3 years, a significant increase in the volume of margins on a trailing 12 months basis. The margin percentages have scaled new heights during recent years. A special mention of FY26 and its 3 quarters. The quarterly margin percentage has moved up successfully with unprecedented yield levels, reflecting a superior product mix and improved operational efficiency. This has helped Lupin raise EBITDA margin guidance for FY26, an improvement of over 2% from its earlier estimates. Sizable operational surplus year after year, FY24 and FY25 in particular, far in excess of capital expenditure requirements. Notably, the surplus of H1 of FY26 is closer to full year surplus of FY25. A substantial contributor to Lupin's liquidity gets support from growing margins and a very positive operating leverage. The excess of current assets over aggregate external liabilities, both long term and short term, reflects positively on the quality and strength of Lupin's liquidity. The surplus has been growing in size over last 30 months, growing beyond 30%. It indicates a strong flowback and also highlights the huge potential to borrow for organic and inorganic growth. A healthy and resilient balance sheet of over rupees 33,000 crores. Long-term debts very minuscule at below 5% of the balance sheet size. Equity is the one that funds almost 60% of balance sheet. Growing revenue and margins help generate decent returns on the flowback facilitated by a modest dividend payment. Rising gradually From the low of FY22, the returns have reached double digits and are steadily moving up. The growth in returns has been quite impressive, in line with the growth rate and volume of profits in the last 3 years, a confirmation that an efficient deployment of capital is in place. With prices moving sideways, the increasing profit levels over quarters have effectively brought down the PE multiple, placing it in a descending channel and at a discount to sectoral peers. The price, as related to book value, has a similar incline but rather less pronounced. Given the trajectory of profit growth, both the PE multiple and price book value ratio suggest potential for attractive returns in future. The share price observed a steep rise from 2023 for over 2 years. In 2025, it has gradually evolved a bottom structure resting on 200 exponential moving average, and this is quite positive from a price directional perspective. For about 5 months between June 2025 and November 2025, the share price was in the bearish zone. The orderly stacking of short-term averages followed by medium and long-term averages is indicative of bullish probabilities for the ensuing period. The gap up price movement in early February 2026 has placed the share price above its 20 EMA level all through the month. Candles reaching out to higher levels in recent days is likely to be a very promising move for Lupin. Price action data for 6 months starting September 2025 indicates a consistent rise in prices accompanied by rising order size levels. This suggests an inherent strength in Lupin's price movement during the period. Lupin is entering a phase of quality growth after an impressive journey from recovery to consolidation. The successful risk management strategy has remained quite promising in growing profits consistently. The risk of periodic FDA regulator visit and observations for compliance across plants is a concern. The business uncertainties from voluminous patent litigation claims and settlement is a major financial incidence. Given the geopolitical volatility and global tariff uncertainties, sustaining margins is a greater challenge. Intense competition in the US generics sector is a constant challenge of margin compression. Hope you liked this presentation on Lupin Limited. I am Vittal Prabhu with the fortnightly video on Stock Learning Simplified. You might like to access similar videos of quality content at our info card. We look forward to your positive feedback to help better the quality of our delivery. Highly obliged and thankful for your valuable time and kind attention. This video is for purposes of information, education and awareness only. This is not meant to be a solicitation or recommendation to buy, sell or hold securities. Wherever applicable, please seek the advice of a competent professional before taking action of any kind.